Hey there YouTube. So in this video I wanted to cover the IRS Form 1098E. This is the student loan interest statement that shows the amount of interest expense a student paid on their student loan payments throughout the year. So this form is issued by the student loan company. A copy goes to the taxpayer, and then another copy goes to the IRS, so they're going to know how much interest you paid during the year. So I want to cover this form and how it actually gets reported on your Form 1040, right? So the form is pretty straightforward. This is a 2020 example. You have the actual student loan company, so the lender's information is up here, the lender's tax ID number, and then you as the student are the borrower, right? So you've got your social security number, borrower's name and address, and then box 1 is the amount of student loan interest paid during the year. Now this isn't, it works kind of like a mortgage, right? The amount of interest you paid might only be a portion, right? If you're making principal payments as well, you're going to have principal. Obviously, principal is not a tax deductible expense. It's only the interest portion. So in this example, John, let's say he might have made $10,000 worth of payments during the year, but $5,620 was the amount of interest that was actually paid on the loan. So, okay, so John gets this in the mail, or he downloads it. So what does he do on his tax return? So we look at his sample tax return here. This is for John S. taxpayer, right? He's a single filer, so non-married. He's filing his 1040 for the 2020 tax year. So remember, the interest he paid was about $5,600. Under the current tax rules, you're only allowed to deduct up to $2,500 of interest. So it's not much, right? A lot of people are paying significantly more interest than that. You can't deduct anything over $2,500, and there are phase outs if you make over a certain amount. So there's a student loan interest deductibility worksheet. Most tax software packages have it, or you can just download it online, but I have one here as an example in front of us. This is the one we're using for John. So when he computes his student loan interest, you enter the amount of interest he actually paid in qualified loans, and then down here you start to look at what are the potential phase outs. So for 2020, if you were a single filer and you made more than $70,000 in taxable income during the year, there's going to be some phase outs, right? So you're not going to be able to deduct the whole $2,500. And if you were married filing joint return, it's going to be $140,000. That's where the phase outs start. So in John's case, if we look at his 1040 here, he had wages of $72,000, had some capital losses. So his total income for the year was $71,500. So he was just over that $70,000 mark. And so he is going to be subject to certain phase outs for his student loan interest. So $70,000, there's a little bit of a math computation down here, but the long and the short of it is, of the $5,600 he paid in student loan interest, remember, $2,500 is the max, and the max that he's allowed to deduct given his income is going to be $2,250. So where does he report that on his return? There is a Schedule 1, right, additional income and adjustments. So this is where you would have additional types of income, alimony, capital gains, business income, etc., unemployment comp. Other income is kind of a catch-all, right? So if you've got like cancellation of debt income or something like that, you might find that there. But the student loan interest is going to be entered in Part 2, right? So there is an actual line item for it, line 20 in Part 2, student loan interest deduction. That's where he puts his $2,250 as a student loan interest deduction. And ultimately that flows through up to line 10A here, right? So from Schedule 1, right, what's the number at the bottom there? $2,250 was an additional deduction that he had from Schedule 1. So that's where the student loan interest deduction ends up. Again, remember the key point here is it's capped out at $2,500 of deductibility, and unfortunately, if you make what the IRS considers to be quote too much money, the student loan interest deduction starts to phase out, and it does get to a point where if you're making a significant amount of money, you lose the deduction altogether. So not great. Hopefully the rules change on this, but for at least the 2020 tax year and the foreseeable future, those are the standards. So Thank you for watching. Hopefully that was helpful. If you have any questions, please leave me a comment below on the video. Happy to answer any I can. So thank you so much. I look forward to seeing you again soon. Bye.